Hello everyone, it's Ahmed Nasser here. In our last videos, we met the balance sheet family and the income statement family, who helped us see a business's financial position and how it earns its profit. But there's still one more story to complete the picture: the statement of cash flows family. They reveal the movement of cash in a business, showing us where cash is coming from and where it's going. The statement of cash flows family story. Once upon a time, there was a family called the cash flow statement. Their job was to track the flow of cash in and out of a business, making sure everyone understood how the company was handling its money. The cash flow family had three important members: cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. Each one had a special role, tracking cash in a different part of the business. Let's meet each one. The story begins with the eldest member, cash flows from operating activities. This is the part of the family that oversees the cash from the company's core business operations, the day-to-day activities. Operating activities starts with net income, which we bring over from the income statement. Net income shows us the business's profit, but it doesn't fully capture cash flow because some parts of profit aren't cash-based. To adjust for this, operating activities adds depreciation and amortization expense. These expenses reduce net income, but they don't actually involve cash going out, so we add them back to our cash flow. Operating activities also looks at changes in current assets and current liabilities. If current assets like inventory or accounts receivable increase, it means cash is tied up, so we subtract this increase. But if current assets decrease, it means cash is freed up, so we add that amount. For current liabilities, an increase means more cash is coming in, since the company might owe more to suppliers, so we add it. But if current liabilities decrease, that's cash going out, so we subtract it. After all these adjustments, we find the net cash provided or used by operating activities. This is the cash generated or used from the company's main business operations. Next, we have cash flows from investing activities. This part of the family looks at the company's investments in long-term assets like equipment, land, or other resources that support future growth. When there's an increase in non-current assets, like buying new machinery or real estate, it means cash is being spent, so we subtract it. But if there's a decrease in non-current assets, like selling an old piece of equipment, that brings cash back, so we add it. After all these adjustments, we get the net cash provided or used by investing activities, which shows how cash is spent or earned on long-term resources. Finally, we meet cash flows from financing activities. Financing activities manages cash related to debt and equity, the business's external sources of funds. When there's an increase in non-current liabilities, like taking out a long-term loan, or an increase in equity, such as receiving funds from investors, it means cash is flowing in, so we add it. But if there's a decrease in non-current liabilities or equity, like repaying a loan or buying back shares, it uses cash, so we subtract it. Financing activities also manages the payment of cash dividends, which is cash given to shareholders. Since it involves cash going out, we subtract this amount. After all these adjustments, we end up with net cash provided or used by financing activities, showing how cash flows in and out related to debt and equity. Once each family member has played their part, we arrive at the conclusion: the net increase or decrease in cash. By adding up the net cash from operating, investing, and financing activities, we find the final cash balance, showing if the company's cash has increased or decreased during the period. And so, by working together, the cash flow statement family reveals the real flow of cash, helping everyone see how money moves in and out of the business beyond just profits and assets. And that's the story of the cash flow statement family. I hope this journey helped you see how each part of the cash flow statement is essential for understanding a company's true cash position. From daily operations to long-term investments and external funding, every cash flow is important. Thank you for joining me on this storytelling session. Don't forget to like, subscribe, and hit the bell icon for more videos on accounting and Excel. Sweet dreams, and I'll see you in the next video.